What if I told you that I could tell you 5 ways to get even less loans closed in this market? Well, that's pretty much what these 5 mistakes are doing for mortgage loan officers that are making them. They're costing you closed loans. And the first mistake that loan officers are making is trying to sell rate. As interest rates rise up, it's becoming kind of impossible to sell the rate at this point because everybody has been used to super low rates for the past few years. And this is where the mortgage loan industry could learn something from the auto industry. And the auto industry has become really successful at not selling the rate, but the down payment. And that's the switch from rate to down payment that mortgage loan officers need to make, especially in this market. It's not about what rate we can get. That's not really what a lot of consumers care about anyway. What they care about is down payment. How much is it going to cost me every single month? The second mistake that loan officers are making is they're chasing realtors. Now, here's the deal. Rates are going up, refi deals are dead. We know that. Every loan officer is trying to do the same thing. They're trying to go out and build realtor partnerships. And then realtors are having a hard time too. So you're competing with way more loan officers than you were before to get this realtor's business, who now has less business and may not have much business at all. Getting a good realtor partner, you could spend tons of time and money doing that, when instead you could market yourself, get leads yourself, use those as leverage, and start to add value to realtors to separate you from the pack. That's how you get more realtor partnerships. You don't want to be chasing them. You want realtors to want to work with you because of how much value that you give. That brings me to the third mistake that loan officers are making, and that's not marketing and advertising. I say marketing and advertising because they're two pretty different things. Marketing is putting content out, getting your name out there, and then advertising is actually paid advertising. A lot of people will say that they've paid for leads in the past and they didn't work, and it's true. A lot of people have paid for leads in the past that didn't lead to anything. There's actually a lot of issues that could cause that. One, you want to make sure that you're at a level that you can take a cold lead from an advertising campaign and turn those into deals, because not every loan officer can do that, especially those who are newer to the industry. A referral is a lot easier to get across the line. You don't have to be as good to work with them. A cold lead, you have to build their trust, you have to nurture them to get them to where they need to be. But here's the difference, and here's why advertising is so beneficial. Yeah, obviously you want a lot of referral partners to send you those easy deals, but the problem is reliability, consistency, and volume. Where in advertising, you can control the volume, so you get a lot more volume, but you need to be ready as a loan officer. You need to be a good enough person at your position to turn that, as many of those leads as possible, into deals. And if you can do that, then your income will blow up. But a lot of people aren't ready for that. So if you're just starting out, they think about, I probably wouldn't, and this is coming from somebody who runs an advertising agency for loan officers. If you're brand new, I probably wouldn't pay for a lot of online leads. I would focus on more organic leads. And then when you're ready, when you have enough business coming in, and when you're experienced enough and good enough at your craft, then take a stab at the online leads. And then as long as you have systems in place for turning as many of those leads that come in into deals, nurturing those leads, you're gonna be set. But there's a lot of things that could go wrong with online leads. But if you're not doing any type of marketing at all, whether that's content creation, which is totally free to you, or paid advertising, especially if you're an experienced loan officer that does have the ability and the talent to turn those online leads into deals, that's a huge mistake, and you're leaving a ton of money on the table. The fourth mistake that I see loan officers making is trying to do it all on the phone. And this really applies to leads that aren't referrals. They're more online leads like we were just talking about. And the reason that this is a mistake is these leads are colder. That means that they're not as close to the finish line as a lead that's referred to you. But remember, the beautiful part about online leads is we get a lot more of them in a lot higher volume. Just doing a phone call with a referral, you can get away with that a lot. But just doing a phone call with a lead that came from TikTok or Facebook, or I wouldn't run ads on Facebook, we do it on TikTok. You get my drift. Any online lead, and then you're trying to do everything from a phone call and send them an application from a phone call, you're gonna have a lot less people convert like that. Start with a phone call because it's a lower commitment on the prospect's part, and then while you're on the phone with them, say, are you around your computer? Don't say, are you around your computer for a Zoom or anything like that, because then they'll say no. Say, hey, are you around your computer? Just want to show you something. They'll say yeah or no if they're not, but most of the time they'll say, yeah, I'm around my computer. Say, are you free to hop on for a second? I want to show you your options, you know, what different scenarios will look like for you so that you're fully aware of what your options are. So you go from the phone call to the Zoom or Google Meet, whatever video software you use, and that face-to-face interaction builds trust so much faster than phone call and texting. Then they see the person on the other side of the screen, they're talking with you, you're able to get the information a lot quicker, you're able to get those applications filled out a lot quicker, and especially the higher quality prospects, you're able to get those closed a lot sooner. So if you're doing any type of online advertising, I highly suggest starting the initial booked call is via phone call, but always try to move them to a Zoom call. And finally, the fifth mistake is not nurturing your leads correctly. Again, especially with online leads. And we take care of everything from calling them and booking them on the client's calendar, qualifying them, even turning the leads that aren't ready yet into deals in the future. If you're going to do this on your own, then this is something that you want to have set up. So leads that come in that aren't ready right now, nurture them appropriately so that when they are ready, you're first of mind, they reach out to you. Leads that come in, a lot of times leads may not be qualified just because they need to pay off a little bit of credit cards, and they may not know this. It's not the fact that they just can't do it, it's just that they didn't know that they needed to. So then you talk to them, then they need to pay off a little bit of stuff, they pay off that stuff, then they come back to you. That's what you want. Or save a little bit for a down payment. A lot of times when a prospect learns how much they need to have saved for the home that they want, then they can start doing that. So what we've done, and this could give you some ideas, is we have partnered with a company that basically takes care of anything from credit. So if it's something to do with their credit, or if it's something to do with them not having enough money saved for a down payment, debt to income ratio, they basically one-on-one coach the prospect from start to finish, from where they are now to getting loan ready. And then we've worked out this partnership where they send that lead straight back to the loan officer. So we send them that lead, then they get them ready, and then they send it back to the loan officer. So finding something like that for you is going to help you a ton. You're probably familiar with credit repair. If you're a loan officer, and credit repair companies kind of, in my opinion, they're not that great. You send people over, you don't hear about, you don't know even if they're doing the program, and then whenever they're finished, it's not even a guarantee that that person is going to send them back. But you know, hey, if you have a company that works for you, I've talked to loan officers who swear by credit repair companies they work with. The company that we work with, they have a high success rate. That's why we like them, and they don't just cover credit. Essentially, what I'm trying to say is have a system to turn as many of the leads that you get into deals as possible, because especially in this market, it's super important to be creative and resourceful to get as much as you can from what you're getting. And if you're a mortgage loan officer and you're wanting to get 3 to 5 new deals in the next 90 days, then I left a link in the description where you can click to find out more about how we do that for the loan officers that we work with. And if you really want to thrive in this market, then what we covered in this video is a great start, but it's not enough, because even if you're not going to do advertising, you need to market yourself in some way, shape, or form as a mortgage loan officer. And that's why we made this video right here, to give you 3 of the best marketing ideas for mortgage loan officers. So go ahead and check that out. And until then, I'll catch you later.